Geared for Growth. I'm your host, Mike Mortlock from MCG Quantity Surveyors. In this episode, I'm joined by Joey Croke, the founder of new proptech platform called Arqelo, designed to streamline one of the most time-consuming parts of property investing, the research. We dig into how the platform works, from its life compass that maps long-term goals through to a buyer's brief that helps rank suburbs across Australia using more than 120 data points. But what's really interesting is the balance between data and real-world insight. Joey talks about why boots on the ground, feedback from agents and property managers is critical, especially given how lagging some data sets can be. We also explore who this is really built for, whether it's investors or buyers agents, and how it aims to strip out hours of research so people can focus more on decisions, relationships, and execution. It's a fascinating look at where proptech is heading and how data-driven investing is evolving. Let's get into it. Joey Croke, thanks for joining me on Geared for Growth.
Yeah, no worries. Thanks for having me.
Now, your story has sort of somewhat gotten out there, but just to kick us off, if people haven't come across you before, talk to us about who you are and what you do.
So 27, FIFO worker, property investor, trying to sort of get out of the FIFO role and more into property with a proptech platform that I'm building called Arqelo. And just trying to build the property portfolio as I go.
Excellent. And you've got quite an interesting story from a portfolio point of view. And it's not often we actually get the chance to talk to property investors first. We sort of speak to more professionals. So this is actually a nice little change of pace. But unfortunately, we have to start off with something that seems a little bit painful to kick the interview off with. But you actually had a pretty disastrous start to your building financial freedom journey at 20. You lost a pretty significant sum of money. As much as that doesn't trigger PTSD, how much can you share with us on that, Joey?
I think the start was good because I started buying shares when I was about 14.
Nice.
And it went well till I was 20, so 6 years, had a good run. And then my old man one day just told me that the stockbroker had gone bankrupt and wasn't sure what was happening with all our money. And that was about 100 grand in there, I think. So he, I didn't get half of that back till 5 years later. And it was a bit of a shock to the system, that's for sure.
So how does that work? Because I presume a broker is placing trades on your behalf, or was it sort of funds in trust or a managed investment that he controlled? Was there shady stuff going on? Like what actually went wrong?
From my understanding, it was pretty dodgy. I'm not 100% sure, but I think the money was there in our accounts on paper, so we could see it on the screen. And then he was spending it elsewhere. So living his life of luxury on our money.
In jail now, hopefully, or was there any positive outcome?
Not positive for him. I think he got a slap on the wrist, and he had 7 years where he couldn't do it again. So his company was banned for 7 years, which is finished now.
So, gosh,
it does. Might start again, who knows?
It does seem the white-collar crimes have disproportionately low kind of consequences for them. But you were off to a positive start, because most people at 14 years old, if they have any money, it's burning a hole in their pocket and they want to spend it on something. What sort of got your mindset to the point where you're wanting to actually invest the money that you had and build finances? That's a bit unusual at the age of 14, I'd say.
Yeah. My dad he's into shares and he's got a few properties. And even when we were young, just getting $10 a week pocket money, he made us divide it up into living, saving, giving, and investing. So for as long as I can remember, I was divvying it up, budgeting, and putting money away, squirreling it away for a rainy day. So thanks to him, he got me onto it real early.
And what was the impact of losing those funds? Did you sort of it set you back, or did you take a number of years to sort of rebuild your sort of trust in the system, or did you bounce back pretty quick? I'm sort of wondering what was the timeline between that and starting your property investing journey?
Yeah, so I mean, it was definitely a setback. So I had to start again and build from zero. And that was sort of, that 100 grand that could have gone to a couple of house deposits at the time. And, things, I didn't get half of that back for 5 years. So there was a big gap there. But I just went straight back into shares. I just thought, well, this guy's it's just him. It's not the whole stock market. And it's him being dodgy. And I actually just I've got him in my name, and I made sure it was actually there, not just someone saying that it was there. So yeah, straight back into stocks, saved up a house deposit, and then went straight into property as soon as I could.
Yeah, right. And the savings for the house deposit, was that a result of the share trading or the FIFO wage, or a mixture of the both? How did you get to that point of having the first deposit?
I didn't start FIFO till probably 18 months, 2 years before the first deposit. So it was kind of a mix of all the odd jobs I was doing. Living at home helped, obviously. And yeah, I just kind of had very, very few expenses. I think the year I bought my first property, I made 56 grand. And that was
nice.
Yeah, I was FIFO then, but I wasn't working that much. So
yep.
Yeah, it was just a bit of discipline and a lot of saving and not a lot of going outside spending money.
Which again, I think is somewhat unusual for somebody in their 20s. Obviously, you had some good financial role models. So, what was the first property about? Where did you buy? What sort of property were we talking about, and how did that launch you into the next one?
Yeah, so that was in Maroochydore on the Sunshine Coast, which is I'm living on the sunny coast, and that was an apartment. It was actually not a great buy. It was I wasn't overly educated. It was just an apartment in a block of 72 or something. Had a few good features, like top floor, corner apartment, with lots of good views of the ocean and the hills. So, but I mean, I wouldn't buy something like that again. And I bought that for $580. But I could have bought, I was a bit, because I was uneducated, I could have bought a house down the road for $600, which would be worth 2.5 times that now or more. But I just wanted to save that extra 20 grand. So I probably could have spent the $600K on the house. I know, older house, corner block. So, when you don't know, but that would have been a much better investment. And, I'd say that'd be worth 1.5 million now or something. And if I had to guess, the unit, which I've sold a few years ago, would probably be worth, 800, maybe 900 now, maximum. So a bit of money on the table, but I still made a bit of money. So I made about $200,000 or something in a couple of years. So it was a good start. But I was living in that one as well, so there was no taxes paid. So it was nice to see that hit the bank account.
It's not terrible. And so did the equity growth in that one put you in a position to grow from there? Was it a mixture of that and your income as well?
Yeah, so it was mostly equity. So I was pretty strapped for cash, living out of home, and I wasn't making the greatest money at the time. But yeah, it was mostly equity. And I bought the next one in Mandurah, and that would have been, I'd say, maybe 6 months later or 9 months or something like that. And that was, so early 2022 or something, I think. And yeah, that propelled things from there. That really went nuts.
So you were living in the Sunshine Coast. Obviously, that's where you invested. You don't need a map to know that Sunshine Coast to Mandurah is a bloody long way away. So what changed there where you were sort of looking at the whole country as a potential area to invest? Did you educate yourself? Were you working with the buyer's agent? What sort of made you go, that's the place that fits my budget and has the fundamentals that I need?
So I was listening to a lot of podcasts at the time because I sort of I spoke to my broker and I thought, well, as I'm learning, a lot of people are buying a lot of properties and they're all interstate. They're not limiting themselves. And that's what I did when I bought in Sunshine Coast. It was just in my backyard, familiar. Everyone starts off doing that. And then, the more I listened, the more I realized that there's opportunities all over the country. And for that one, I did get a buyer's agent, used him, and it was either Brisbane or Perth. And I think either one would have done really well. So.
Awesome. So catch us up to today. What does the portfolio look like, and where are you at in terms of what you're sort of set out to achieve with property?
So I've got about 8 rentals at the moment, and I've only got 7 rented out. Just got to fix up a granny flat, and then that'll be rented out probably in the next 6-12 months or something. So that'll be 8 rentals. I've got most of them are in Victoria. I've sort of bought over the last couple of years, 2024, 2025. I've got a few in Geelong, a couple in Shepparton, and then the one in WA as well. I mean, when I started, I thought, just a few would be enough, but I really enjoy the process. So I just want to keep going and keep building. And, I'm starting to scale a bit more aggressively. And last year, I think I bought 4. So, if I can do that again this year or hopefully more, and then, I think the sky's really, it's sort of, I just enjoy the journey. So I don't really want to stop.
Yeah, well, I mean, we're not going to get in your way, mate. This is geared for growth. We're all about it. That 4 is quite a number to pick up in a short period of time, and it's quite a number for any investor to get in total. Like, you're beating the stats of the majority of people. Let's say 90% are not going past 2 properties. You mentioned FIFO before, and I'm wondering how you got to the point where you're able to grow that portfolio. Is the secret a massive stonking salary, or have you been able to get properties that have performed pretty well? Is there some trust magic in the mix? Did you come across any serviceability constraints? I'm just interested in the strategy there. The Geared for Growth Property Investing podcast is presented by our business, MCG Quantity Surveyors. If you're an investor or a property professional looking to get the best tax depreciation deductions for yourself or your clients, please get in touch with us at mcgqs.com.au. It's our mission to help as many property investors as we can to maximise their claims and maximise their property education as well.
It's kind of a mix of everything. So, I mean, I've always upskilled, trying to work more, do all the overtime I can. I'm chasing the money in the industry. So if there's a new job that's paying $30,000-$40,000 more, I'm going to do that, So that helps for sure. And then the properties I got in Shepparton, they're really high yielding, and they're in my personal name. So that helps with the income. I've never really had any servicing issues. And then, I've sort of recently got into trusts over the last 12 months, buying those. And then I try and buy under value and get as quick as equity as possible in sort of an early market, get the upswing, full potential of that, and then, rinse and repeat.
So obviously you have a very specific idea about what blue chip investment style properties are for you. I shouldn't say blue chip, but investment grade properties. And you've sort of had to do things the hard way to some degree when it comes to the research and the data, and that's led you to invest in that space yourself. What can you share with us now with this project that's in beta at the moment?
So it's called Arqelo, and basically what it is, it's designed to help investors and buyers agents just cut research time. So I've got the idea because I've used previous platforms before, and there's a lot of manual filtering and sifting through suburbs, and this one just streamlines the whole process.
So how does it work from a front end point of view? Is it designed for practitioners like buyers agents, or can just investors themselves use it? Do you have to fill out a questionnaire, or do you enter in a brief? Explain how it sort of all comes together.
Yeah, so all of the above, really. It's good for buyers agents and good for investors like myself who do it regularly. But basically what you'll do is you'll answer your questions, and it kind of gets to know you. So we've got what's called a life compass, and that's about 8 questions, and that you put in your goals, your long-term goals. That sort of guides your whole property journey. And then for each purchase, we've got a buyer's brief as well, and that will be more specific to your next purchase or your next couple of purchases.
Yep.
And so you answer that, and then the platform spits out an answer of a suburb for a buyer's agent to park a client or investor to start looking at across the country. It'll rate them out of 100 based on current market trends and their goals.
Now, when it comes to the methodologies of different platforms, I've heard conversations about some sort of measure median prices or vacancy different ways. Obviously, you're talking about ranking these suburbs as well. So how much of that comes from your investing philosophy? Because I suppose you have to apply certain weightings to different things to get an end result, right?
Yeah, correct. Yeah, so it is a lot of my methodologies, but I've also had input from investors that are much, much more successful than myself. So it's sort of just a tried and true method, that can be applied to just about anyone.
Mm-hmm. And what have you learnt in putting this program together about different data points and about weightings? Has anything sort of, created some light bulb moments for you?
Yeah, I think one thing that I've sort of learnt is I've had to implement a sort of boots on the ground research into it as well, because the data is a bit lagged.
Mm-hmm.
So I like to get into a market early and get the full growth, and that's where that's where Arqelo would put people as well. But the data is sort of 3 to 6 months lag. So I've actually got a few people around the country, property managers and investors and stuff, and I'm just constantly reaching out to update the data on the back end of it. And I think I've just sort of learnt that, it's not all about the data, it's all about your network as well. And I've just combined the two.
Yep. Yeah, so those sort of leading indicators that often don't sort of get published in the way that, say, settlements do, that are way after the exchange, you can plug in people on the ground to say, look, is your inquiry for rentals sub 650 in this suburb going up or down, like those sorts of things?
Yeah, correct. Yep. So I'll reach out to a property manager and they'll tell me about the inquiries for their rentals, or real estate agents. They'll tell me how many people are at open homes, things like that. And you can learn that open homes that happened last weekend, that's a lot more up to date than what's reflected in CoreLogic 3 months later.
And what's the vision for the platform, and map us out the next sort of 12 months? I think you mentioned before that you're in beta testing it at the moment. What does the rollout look like?
Yeah, so I've got about I've got quite a few people on the list. I've only given it to 10% so far, so I'm just going to keep rolling that out over the next few months, and I'll get as much feedback as possible, and I'll pass that on to the developer and just improve and give people what they want. And then hopefully in the next 12 months, we'll be a subscription service, and we'll be rolling out to buyers agents and investors across the country.
Awesome. And you mentioned you'd worked with different platforms, different software before. What are some of the things that Arqelo solves that you really didn't feel like had a good methodology in the existing things out there?
I think for a buyer's agent, the main thing would be just the time it takes. So, you can pass on the brief to a client and they'll answer it and it'll give a result, to the buyer's agent instantly or almost instantly. Whereas other platforms, you've got to filter through, you've got to, do a lot more research, and it's sort of just the job's done for them so they can focus on client relationships and negotiations and building the business, So it's really just the main issue it solves is the research time.
Yep. So I suppose in some of these platforms, I guess they're designed for lots of different people who maybe want to just go, look, just tell me where the bloody suburb is that's going to give me the 20% growth that I want, sub 700K in the next 12 months. Others wanting to filter everything down to within an inch of its life. Is it more sort of designed for the people that aren't worried about splitting hairs on analytical things, and more just like, here are all the fundamental drivers, pointing in one direction and they're pointing in X place.
Yeah, to a degree. So obviously it'll give them the answer, it'll like you said, they just want to know where should I park my money. But it's got over 120 metrics that it analyzes, so it can get quite specific. If you do really want to split hairs, you can, or you can go the other way and just get it done and park your money and move on to the next one.
So for people that are interested in the platform, is there a way for them to test it out or get involved?
Yeah. So you can go on the website. It's arqelo.com. I've got a wait list at the moment, so that's ending shortly. But if people hurry in, they can join the wait list, and I'll send out some details when I'm ready to roll through the whole beta phase.
Beautiful. Yeah, and it'd be awesome to sort of see some of the results that come from the platform. I guess you'll track transactions and where people are going and what they're doing. So there could be a good catch up in a year or two to talk about like what people are doing and what trends you can uncover in the platform as well.
Yeah, definitely. It'll be good to sort of capture my own data within the platform for sure. And that'll, tell me where people are moving and where they're moving into and where they're moving out of.
Awesome. All right, Joe, well, thank you very much for sharing this exciting, shiny bit of tech. And as you mentioned, anyone that's interested in having a look, go to the Arqelo website. And we look forward to having you back just to see how this little prop tech adventure is going for you and perhaps in time check in on that portfolio that's going from strength to strength for yourself as well.
Yeah, definitely, mate. I'm excited to do it.
Awesome. Cheers. Have a good day.
Thanks, mate. You too.